we all doing? How is everybody? Finally Tuesday. Why is that a good thing? Well, we got news today. Finally, some news that might kickstart the market. But we will see. That's the wrong button. I wanted to press that one. So, how is everybody? Peter, JC, Amy, Danny, Christian, Efron, morning. Virginia, Jerry, 100 lots. Ooh, that's dangerous. Morning, John, Kennelly again. No, Christian, it was earlier. Morning, Baggy, Peter, how we doing? So, nothing much changed yesterday. Still sideways movement. Morning, day trader. So basically, CPI this afternoon for the Canadian dollar. First piece of news this week that's going to move the market. We've got a big week ahead of us. First one kicks off this afternoon. Then we're off into CPI for the pound, FOMC, GDP, more rates, unemployment, PPI, PMIs, etc. So really busy week kicking off this afternoon. So this morning I would expect a fairly quiet move, probably a little bit more sideways, and then fingers crossed we get some movement this afternoon, but we may wait until FOMC. So we'll have to wait and see what happens today. Aussie dollar monetary policy meeting minutes came out overnight. Nothing happened there. So no news on the Aussie dollar. Canadian dollar's rallying a little bit this morning, but there's no real movement on that. Aussie, the yen has had a little bit of a weak start during Asia. Nothing particularly dramatic. However, the US dollar is starting to look like it wants to rally and break through last week's high. And last week's high just about broke through the previous week's high and rejected. So it does look like we are having another little run up. So we'll see what happens today. But overnight, there was no news. Vilroy's talking at the moment, so we might have some euro movement in a minute. But there's no news overnight at all. Nothing from Japan. Just nothing. Nothing. Might as well go and get another job. Nothing's moving, is it? So if nothing's moving, you can't make money. ECB will keep rates at 4% as long as needed. Good level. Better be patient. Inflation is back to 2%. The fall will start. So they're not going to cut rates until 2%. Late. So nothing particularly exciting coming out of there. Yesterday banked. What did I bank yesterday? Euro odd yesterday. So the only thing I banked yesterday was Euro odd. Got out of that, which was a nice, easy 2-entry, 2-day trade, straight in, straight out of the RSI extension, M5 with the market reversal alert CA into propulsion, which is where I wanted to get out. My target actually was here, but I decided to jump ship there just in case we double topped on the previous day's high. So that is out. Everything else just in. Pound US dollar this morning. We've had a little bit of a push down at the start of the day, end of Asia, basically, straight into yesterday's low, straight into rejection. So this morning we've pushed down towards those lows. Buyers stepped in, took back control. We've pushed down again, second attempt by the sellers. Buyers are stepping back in again. So this looks like this area here is full of buyers at the moment. So that's a good sign that we might get some upward movement. So whether we get much today with the US FOMC tomorrow, I don't know. There's no news today on the pound. So yeah, we'll just wait and see what happens. But that's overnight news. Nothing exciting happened there. DAX this morning, we've got a gap down which is just filled. So we did have a gap down that's just filled. So if we look at the DAX from today's perspective, yesterday obviously another down day on the DAX. we've got these lows down here. So this is previous week's low, last week's low, very good rejection down there. So that's your target to the downside today. If we break to the downside, that's where I'll be looking for some kind of limit order triggers from the banks. That's just about ADR right down here. So 3/4 of an ADR to an ADR of downside potential. Upside, this movement we had down Friday and yesterday is pretty steady, as you can see. It's a total collapse, sustained shape recovery on the news from last week. We've tapped into this area here. So this is a previous support, turned resistance, turned support. So we're just rejecting that area again. So if we break to the upside, which it looks like the market wants to do pre-market, but we've got a couple of minutes yet, we'll wait. If it breaks to the upside, there's not really anything there, I would say, that's going to stop us. We've got an old high there, which has obviously been invalidated. So upside potential, sky's the limit today. 200 ADR all the way up to last week's high. So ADR down, unlimited up. So we'll see where we go. But that was a big 2-day sell-off we've had. So market isn't happy at the moment. We'll see where we go. We've got 1 minute to the open. Just a quick recap of what the market reverse alerts EA set files are doing. Hedging set file is up to pretty much 20% this month now. We're on the 19th, so we're on for a potential 30% month. Normally it's about 25, but 17% drawdown. That's always in 10 to 20% drawdown. That's where it lives. It's a hedging set file, so it's always in drawdown. The H4 mean reversion hardly done anything this month because we haven't had many entries and we haven't moved. H4 needs a little bit more wiggle room to get profit, and we haven't had that. Obviously, we've had sideways market for 6 or 7 weeks. A little bit of DD control yesterday on that one, so not made a loss, but not making any money at the moment. Same as the H1 mean reversion. We're stuck in everything because nothing's moving. ADR reversals did some drawdown control yesterday. It's done 16% this month. It's gone into a bit of drawdown on this CAD Swiss. So that has been moving, as we know. Oil has been moving very fast. CAD Swiss has been moving very fast. Swiss franc devalued with the euro. Canadian dollar increased with the oil moves. So that's kind of the little perfect storm at the moment, the CAD Swiss. That will obviously unravel itself at some point, but it's had to do DD control on that. So yeah, all the set files doing well. You know, not making a loss. What more can you ask for? And making some decent money, but it's tough. Tough at the moment. Very tough. Right. Oh. Just realized. I just got to change all these set files. I've turned the VPS off, and I've just realized I've left it on visual mode. Come here. That was a silly thing to do, wasn't it? So I'm not going to take the pre-market today because I fat fingered it. But pre-market break is short. Depending what you're taking. If you're taking the pre-market 15, which is the normal, you haven't been triggered yet. But the pre-market 10 is within 20% of ADR. So that's what this version has decided to take this morning. Although I'm not on it. So downside. So there you go. You're in. If you're taking the pre-market 15, you are short. So downside, we were looking at just before ADR, remember, where we've got these 2 weekly lines. So this is previous week's low and last week's low, or other way around, whichever you look at. But 5R to the downside on that pre-market range is our potential downside target. So we'll see if we get that pre-market low broken. But this might just want to sit around today. We'll see. Right, just quick looking at FX while we're waiting for that to move, because it's not the most exciting open in the universe this morning, is it? There's no ADRs. I really feel like a broken record at the moment. It's almost exactly the same script every morning, and it has been for weeks, isn't it? No ADRs, no weeklies, no monthlies. We're not moving. Nothing's moving. Nothing's going anywhere. RSIs, nothing on the hourly, flat. 4 hours, we've got a few to look at. Funnily enough, they're the same ones as we've been looking at for the last 3 or 4 days because those things are squeezing. So we'll have a look at those again. But there's nothing on the hourlies again. Look at these hourly RSIs. They're all sort of like 35s, 60s. You know, it's just not getting anywhere. We're just not going anywhere. We really need that FOMC tomorrow. We really need the Fed to shake this market up and wake it up a bit. We need some direction on this US dollar because the market at the minute is just not interested, is it? So painting the inside bar on the DAX on the hourly at the moment. We haven't managed to break out of this pre-market range. We're not going anywhere at the minute. We'll have a look at these RSIs while we're waiting. If anybody's got anything to look at, let me know. Who's turned up? Evans, thoughts? Marco, Daniel, morning. Maybe as the markets are flat, time could be used for other training economic things. It could, thought feeder. What would you like to be trained on? Train you on stuff. I don't know what people want. So if you want to talk about anything, let me know. We'll talk about it. As long as it's not prop. Somebody said that my Forex, oh, if only I could type. My Forex fund's website is gone. Oh, proper gone. Gone. Bye-bye. They're not coming back. I'm not going to get my money. Time to talk to a solicitor. Yeah, gone. Morning, Jedi Mind Control. Yeah, we can talk about Jedi Mind Control. That's not how it works, is it? I haven't got a Jedi Mind Control. Closest I've got to John Wick doing Jedi Mind Control. Brian's not in here this morning, so I won't get one of these made. But that's the closest I've got to Jedi Mind Control. Just realised John Wick's hands. I haven't actually looked at his hands in this. Look at these hands. What is that finger doing? That finger comes out the middle of his hand, look. He's missing a load of fingers there. That's another thumb. These are all generated by AI, for those that don't know. That hand is proper broken. Not very good at hands, is it? Look, tips of his fingers are missing. And what the hell is that? He's got a claw. Poor old John. See, look, it's not good at fingers, is it? It's definitely not good at fingers. They're not bad. Although that one seems to be detached from his hand. Anyway. There you go. Morning, Abdul. AI and hands. Yeah, it's not good, is it? They really need to sort that out. Okay, so there's your 5-minute opening range candle. I'm taking the 5-minute opening range today. So going to take a break of the 5-minute ORB. Difficult one today because you're buying straight into potential resistance and you're selling straight into potential support. So it's a tricky one today because it's kind of an inside bar on the pre-market range. So it could bounce around in here, but we'll see where we go. If we break to be honest, today, the preferable break for me would be to the downside, which it has just done. So I'm short. Just because we've got a 2-day drop and we've got a definitive target to aim for down at these weekly lows. So there's a very obvious bounce point. And obviously, because we're range bound at the moment with absolutely everything is range bound at the moment, that makes the obvious trade today to just get down to there and get out at those lows. Failing that, you're looking at 150 ADR if it decides to rally hard. Pretty easy trade today. We'll see where we go. We're certainly broken short, so I'm short the DAX. Maybe a silly question. What's your definition of hedging? Well, my definition. Thanks for subscribing, Relga. Welcome aboard. Realize my volume is down. Can't hear you subscribing. Well, my definition of hedging, there's two definitions of hedging. One of them is proper hedging that the institutions do, which is basically taking a position in a market contrary to what a company does. So I always use the corn or any kind of farming scenario where you're a farmer and you have a crop of X, and that crop is going to be worth something. It's worth something now, and it's going to be worth something in the future. So what you do is you take a futures position on corn to hedge the difference between what it's worth now and what it could potentially be worth in the future. So if there's a flood or a plague of locusts and your crop is destroyed, your futures position pays you out. Hedging from an FX perspective or an instrument perspective is where you basically have a position running on a single instrument in two directions. So you are basically locking in the loss on the position or the profit on the position. You can positive hedge and negative hedge. But you can also hedge intra-currency. So, for example, exposure-wise, I am hedged on the Aussie at the moment. So I've got the Aussie dollar, US dollar long. So if the Australian dollar goes up, I'm going to win money. But I will lose money on the pound odd. Because on the pound odd, I am also long, which means I'm short the Australian dollar. So I'm hedged on the Australian dollar. Doesn't matter which way this thing goes, I'm going to win. And then I've got to deal with the other position. So there's multiple ways of looking at hedging. There's all sorts of different scenarios for hedging. But you know, they are all different. If not Jedi Mind Control, perhaps a short tutorial on the basics of knowing when to buy and sell certain stocks. I don't trade stocks. I don't do stocks. I can't tell you when to buy stocks, when to buy and sell stocks, because I don't trade them. But you sell when they're high and you buy when they're low. Sounds simple, but that's exactly what you do. Same as the stock market. Look at the S&P. So the S&P is just a stock index. Oh, no, I didn't want to do that. So with the S&P, when it's come down, you buy it. And when it's gone up, you sell it. What the RSI is for. This is why everybody in stock trading uses the RSI, Relative Strength Index. It shows you the relative strength of the instrument that you're trading. It's what Larry Williams has used for decades to make tons and tons and tons of money. You buy every dip. But there you go. If you're talking about stocks, actual individual stocks, I mean, I used to trade individual stocks. So there's like everything, there's 1,000 strategies for trading. You can swing trade stocks. You can trade options. You can intraday trade stocks. So the way that I used to trade stocks was on gappers and earnings. So I used to basically look for gappers, which are stocks basically that opened higher than their close price. Or you look for earnings plays. So a company that's got earnings. So typically on an earnings play, you will have a stock open either massively higher or massively lower than its price yesterday. And then you'll either get a fade or a fizzle, or you'll get a gap and go. But it's the same as everything. There's a 50-50 chance. Yeah. So if you get a stock, I don't think I've got stocks on here. Yeah, I have. Yeah. So see if anything's had earnings. What's the day today? 19th. We've had Activision and Goldman Sachs pre-market. That's July. 19th. No, there's no stock earnings today. Can't really do a stock, but there's NVIDIA. So this is a typical stock. Yeah. So you can see, obviously, market close, market open. Yeah. Stocks gap all the time. And when you get this is a prime example, actually, in a video at the moment. It's exactly what I was saying. So you either get what's called a gap and go. So it gaps down and then it goes for the day. Or you get what's called a fizzle, or well, let's call it all sorts of things, but a gap and reverse. So it gaps down, and it gaps down too far, and it pulls back where it was and does a gap fill. Yeah. So there's only two things at the open, and you play the open in the same way as you do with what we're doing at the moment with the opening range breakouts. Yeah. You are in the market at 9:30 at the bell in New York, and you will get a gap and a go, and you take that break and you stay on that break. Or it will gap down and it will then try to reverse itself, and you do exactly the same thing. And then at the end of the day, you can play what's called a VWAP fizzle, which is basically where as the day gets to an end, you will have a move which stops, and then it will draw back to the volume weighted average price. Those are the two stock strategies that I used, and they work very, very well. But there's a 50-50 shot, exactly the same as everything else every time you take a trade. So either the fizzle works or it doesn't, the gap and run works or it doesn't. And if it doesn't, you tend to do what's called a stop and reverse. Rather than a stop out, you stop and reverse, because it will usually do one or the other. Stocks don't stay still, especially things like NVIDIA. I used to trade NVIDIA all the time. It's a brilliant stock. It just moves constantly. There you go. While we're waiting for the market to do nothing, as usual, there you go. Quick lesson in stock trading. Gone nowhere at the open. Well, I say the open. We've gone nowhere so far on address. Is it hedging something that you are not in favor of in a position? Yeah, so I don't position trade. I don't hedge my positions as in with position trading, no. Just because it's complicated. It's really simple to hedge something like the DAX. Yeah, so you can see I'm hedged on the DAX, yeah? Now, so I've got a hedge on. This is easy to manage because I have got an equal long and an equal short. Yeah, I've locked in $1,000 in loss now. So if I do nothing all day, the very worst thing that can happen to me is I lose $1,000. But if this thing pushes up to ADR, I can get out at ADR or an area of support resistance and then play a reversal to get out of the position in a profit. So when we go down today to these weekly lows down here, yeah, so if this drops down to here now, at 4R, I will close out the shorts and hope for a bounce, which will get me out the longs in profit. It's simple, isn't it? It doesn't take a rocket science to do this type of hedging. It's very easy. You've got one position, both directions, very easy to do. When you're looking at position trading and hedging on position trading, you've got multiple positions on. So you have to manage multiple hedges, or you have to take a single hedge. So if this goes short now on the pound US dollar, what I could do is take a 5.68 lot short on the pound US dollar. If this drops today, that locks in this 4.9% drawdown, and I will get out of this hedge when it goes down. The problem is, what happens a lot of the time when I've tried this in position trading is when it goes down like this, it triggers me into my short, and I go, fine, excellent, I've locked that in. And then it goes like this. And it goes back up to my average. And I'm like, fantastic, I can get out of my position now. Unfortunately, I've got stuck in a whacking great hedge. So when this hedge pushes up against you, what do? Take a hedge position short? And if so, you're doing it with 5.6 lots? Work. So you can look at taking smaller positions, which is what I did. So I'll take a half or a quarter hedge short. So a bit of my position short. But then what happens is it goes back the other way, and I'm stuck in a 25% risk hedge short which I've now got to deal with. And if it does what I think it's going to do and does a profit take move and then it pulls back and changes direction, I'm stuck on that short hedge. So what I found when I tried to do it, and I have tried to do it, and I've built an EA which models it to test it, I just found myself getting completely messed up. So that's why I don't do hedging on position trading. You can do it. It's just very complex. When you get a move like this on the pound US dollar, yeah, what you tend to do is you look for areas of support to do your hedges. So right now we're at this level here, yeah, that is where the hedge should be placed, in the assumption that if the bounce doesn't happen, we're going to continue down to another support, and then you'd look for another support to get out of your hedge. When you get a move like this, what you're going to be doing is locking in exponentially more and more and more loss or more drawdown every time a hedge doesn't work out. And you're also going to be basically increasing your lot size exponentially. So you find that you're eating up all of your liquidity. When you're stuck in something like this for 6 to 8 weeks, it becomes almost impossible to manage. For me anyway. I just find it very, very, very difficult. So just don't like it. That's me personally though. Thanks for the follow. Welcome aboard, whoever that is. Base Advanced and Clinical SaaS. Good name. What web page were you on with the listing of the companies for the stock? Blue items. That is ii.co.uk, Interactive Investor. So this is what I use for earnings fortnight. So obviously it tracks when all the earnings are released. If you're a stock trader, you will be using this or something like this. Scanner. So in stock trading, you use scanners basically. So like our dashboards, yeah. So like the dashes that I use to monitor stuff. We'll be monitoring RSI, ADR. Yeah, in stocks, you'll be monitoring gappers and runners. So when the market opens, you'll be monitoring for runners because those runners are going to fizzle at some point during the day. And you're monitoring pre-market. You're doing a gap scan to see what's gapping, and those are the stocks you tend to trade. So with stock trading, you don't trade the same thing every day. Have you seen dollar yen ADR movement? Holy cow! Yeah, in stocks, you basically trade what is moving because you've got literally thousands, tens of thousands of stocks available to you. So you want to look at medium to large cap stock only, not small cap stock. And you just basically want to trade what is moving. What is going to move today? Stuff that's got earnings. What is going to move today? Stuff that's had news that makes it gap. Those are the things that move. The rest of the time, you'll find most stocks just go like that. Yeah. Unless there's a reason for a large amount of people to buy or sell a stock, stocks just do that. They don't move. So you only trade what moves. So you need scanners to be able to find out what is moving. Sectors. So you'll have sector heat maps in stocks. So something like this, yeah, the spider sector heat map. Okay, I was going to say that used to be a sector heat map. So what's moving today? Not a lot. Well, consumer discretionary is dropping. Tech stocks not doing particularly well. There's nothing really moving at the moment because the market's not open, but this will light up a lot during the day. So you'd be like, right, tech sector is on the move, right? So if you get a 1 or 2% gain in the tech sector, i.e. the NASDAQ, you can look at the NASDAQ late in the day for a fizzle. It will fizzle back to VWAP because you don't usually get stocks doing that. They do that, and then they do that. Yeah, so it's the same principles as trading in position trading. When you're trading in stocks, you're looking for stuff that has a potential to either move at the open or has moved at the open and is potentially going to fizzle back. Somebody, I get these constant scammers at the moment on my phone. basically trying to scam me into saying my products are terrible, they're going to report me, blah, 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 blah. And just literally every day on Facebook, there's just scammers constantly. But anyway, so yeah, there you go. That's how stocks work. Pretty much the same as everything else. Yeah, if it moves up and down, it moves up and down. But with stocks, you kind of play it in a different way. So most people scalp stocks because holding overnight, it gets expensive and it's very, very dangerous to hold overnight. Yeah, as I've just shown you with NVIDIA, yeah? Look at this on the daily. Yeah. If you shorted NVIDIA there, whoops, you're in big, big, big trouble. Yeah. So most people do not overnight hold stocks. If you're going to hold overnight stocks, you're going to swing, you need a big, big balance to do it. Dangerous. That is an earnings run. Yeah. So this will be NVIDIA's earnings. If you look at the date of this will be, where are we? 25th of May. If you go back to this website, I don't think I've got it back to May, have I? That's the video. There we go. So Wednesday, 23rd of August, for example. Yeah, so that, I mean, that's not a big one there, but that's the gap. So that much was the gap on the video earnings. Huge gap up. And what did I say? Fizzle. So it's a gap, fizzle, or you get a gap and run. There's a gap and run. Literally two things happen in the stock market. You have a 50-50 chance of getting it right, but you don't ever know which. Exactly the same as we trade with the opening range breakout EA. It's exactly the same principle. We take an open. It is going to go one way or the other. If we knew which way, we'd all be billionaires. We're not. So we have gone up on the DAX. So New Zealand dollar yen is our first ADR of the day, running up into resistance. So good short opportunity there. Let's just see if this is yen weakness or if this is New Zealand dollar strength. Yen weakness, look. Okay, so the yen's opened weak today. That means that US dollar yen is probably going to break. I was going to say US dollar's weak. Oh, we got a very weak US dollar. Look. So US dollar yen is the only thing that isn't actually going to move today from a yen perspective at the moment. So we've got a weak yen though. So you got a nice potential resistance coming up on New Zealand dollar yen. Drop down M5, wait for that reversal alert off of ADR, potentially for a short coming up right now. So what we will hopefully do is hit that resistance, have some limit orders trigger, get a nice tight M pattern reversal, and you can short that New Zealand dollar yen. Have a look at these ADRs and RSIs in a sec. Morning AZ. What web page are you looking at? Answered that one. Morning Bunker. Basically still ORB, but stocks, yep. All the same. All the same. The vast majority of people trade 5-minute and 2-minute charts in stocks. If you want to learn to trade stocks, go and see Kunal Desai at Bulls on Wall Street. He's brilliant. He's a really good trader. Been going for probably 20 years. A very experienced trader. But you've got to be a very, I wouldn't say clever person, but you've got to have your wits about you in stocks. You think opening range breakout strategy is tricky. Stocks is 10 times trickier because you haven't just got to trade one instrument. You've got to sift through 6,000 to 10,000 stocks to find the instruments to put on your watch list, to watch your watch list, and then analyze each of those things. It's a very complex thing. Very, very difficult. But good. You make a lot of money in stocks. You can lose a lot of money very easily as well. But just accept the fact that nothing's different to this. Every single time you press that button, the odds are the same, 50-50. So nothing different. It's just a more complex, different market. Strange market opening these last few days, Rajiv. Yeah, very difficult. This market at the moment is, as I said the other day, it's the hardest market I've traded, I think, ever. With this movement that we're seeing on everything at the moment, it is just horrible. Just not doing normal stuff at the moment. It's just weird. Okay. Roman, hi. What's your name? Bob. What does it matter? Lee. That's why I stopped stocks. Just too many to choose from. Another layer to figure out. Yeah, exactly. Morning grey. Right. So RSIs. CAD Swiss extended to the upside. Got one short on that from last Thursday. That was an RSI extension, H1M5 mean reversion. So all we got was a day and a half sideways and a little leg up. So we're pushing. This Canadian dollar is still rallying off the back of oil. Oil is not stopping at the moment. The Saudis and the Russians are seeing to that by strangulating production. It is heading for $95 a barrel. And the way this is going, it could get there this week. Will be interesting to see what happens when it gets to 95. So yeah, we're off. No pullbacks, can't get out of it. So while this CAD is rallying, or while oil is rallying, the CAD is going to rally. However, we've got the CPI figures coming out for the Canadian dollar this afternoon. So if CPI comes out as a negative, that could really put the brakes on the Canadian movement. So we will see what happens. But potentially we've got a strong CAD for the foreseeable. So that's extended on the 4-hour. You have not had a profit take on this since we were back at 65,150. Yeah, so we've put in basically about 4 ADR, pretty much 3.5, 4 ADR straight up, no profit take move whatsoever. So this thing's exhausted. As you can see, it's extended, it's embedded, it's got divergence, it's ready to pop. We're just waiting for a little bit of negative news on the CAD or a pullback in oil, and we'll suddenly get that move retrace. So that there's multiple accumulations we looked at. So we've got that accumulation there, we've got that accumulation there, which is tiny. It's only literally a 4-hour move. That's the main one we're looking at. So that area there, somewhere around here, which is 125 ADR today, somewhere up in that area is our next potential resistance. If we just get a break through that into propulsion, is where we're headed. So we'll come back down out of that area. So yeah, lovely profit take coming on this at some point. Just waiting, aren't we, on CAD Swiss? CAD Yen also extended to the upside. As you know, it's Canadian dollar. It's rallying on oil. So we got a big move on that one. We are obviously in an uptrend on this at the minute. We've broken out of that previous monthly high now. You can see that 110 level I've got on the chart is the next resistance to the upside. 110 to 110 and a half basically is these two highs. They're very old. We're going back to October last year, so they're nearly a year old. So the chances of there being a massive amount of limit orders sitting at those areas is probably slight, but we will likely get a reaction. Everybody's watching these levels and markets react at the same levels. So everybody's watching it, becomes a self-fulfilling prophecy. So we will get a bounce off of them. Whether or not it's enough to start a pullback, we'll find out. You've got an opportunity for a short play there as well. So again, drop down M15, wait for that reversal alert. You will have already probably been in this from yesterday. I don't think we had a reversal alert yesterday, did we? We definitely had one on Friday last week. So yeah, so just wait for that reversal to start to kick in on the CAD Yen. Pound CAD, probably the most extended thing in the planet at the moment. I've only got one position on this. So this was an H1M5 from Thursday last week. Since then, we've just gone sideways and we're still grinding down. So just want to see if this pound is weak today. Pound's weak. Thankfully, the US dollar is also weak. Hence, the pound US dollar isn't moving, which is great. Thanks for the follow there, Nevin. Welcome aboard. It's more nicer to call you Bob than market structure trader. That's fine. You can call me Bob. My name isn't Bob, though. It's Lee. I just made that up. My name really is Lee. It's not Bob. Okay, just to clarify. Pound CAD. So yeah, big drop on the pound CAD, obviously, as you can see. Canadian dollar rallying hard. Pound has just had bad news after bad news. We've had nothing from Bailey to bolster the market at all. So this thing's just collapsing at the moment. Big extension on the hourly. We've got divergence in place. So, there is some relative strength sitting underneath the pound. We just haven't got it because the CAD is just like a steam train at the moment. So nicely extended below the 20 level there. You don't often get double extensions that don't end up with some kind of big, fast pullback. So you can see one there above the 80 level, which is where we got extended. Then we got extended again. So that creates divergence, and then you get that massive payoff. We've got, again, the same thing happening here. We've got divergence. We haven't had a profit take move that high there, basically, this propulsion gap. Since there, we haven't taken profit on any of that. So they are going to take profit on that whole move, basically. So that will be paying out very soon. Probably going to need to get down to pretty much ADR today, which is that support. But again, 1:30 this afternoon, this thing is going to do one of those because we got the CPI figure. So if we get an as expected CPI, it's difficult to forecast which way that's going to go. Positive CPI, we should see a rally in the Canadian dollar because they've got more room for their interest rates to go up as well. Negative CPI, we should get weakness in the CAD. But if oil is continuing to rally hard today, we'll probably just get a range. So it's quite a tricky one, the Canadian dollar, because of the strength in oil. Pound New Zealand extended on the 4 hour. Again, all these pound pairs dropping like stones at the moment. Pound US today, we've got no US dollar strength at all. So if this pound weakness continues for the next couple of hours, and then we start to get a little bit of a pullback on it, if that US dollar hasn't powered up and we get negative news on the CAD, the US dollar will also weaken. So this is going to have an opportunity to run today. But we're going to need negative CAD CPI for that to happen. But nicely extended on the 4 hour. We've been extended and embedded a couple of times on this. Not really getting any traction, is it? US dollar CAD as well. Big extension. I've been out of this one. I mean, I've got an exit here. It's a tricky one for me today because I can get out of this now with a break even. And to be honest, I think we're probably looking at, 1, 2, 3. So 0.9, 1.2, 1.2, 1.5, 1.7. I reckon I'm probably about 1% in the hole on it. Ish, maybe. Which isn't bad considering I got into this trade back in August. I've lost 1%. Whatever. But you can see I'm at a break-even point on it with the last 3 positions that I've got on at the moment. However, if the Canadian dollar gets a positive, it's a bit of a double-edged sword for me at the moment, the CAD. If it gets a positive CPI figure, we could easily be down at 150 ADR on this because we've got a weak US dollar at the moment. If it gets a negative CPI figure, what I don't want is that. So I'm going to probably, with this US dollar CAD, just because I've been in it for such a long time, I'm going to wait and see where we are when the news comes out at 1:30. If we can be down here somewhere, what I will do is I'll put a protective stops in place below break even, and I'll just take a break even on the final part of the position. If it rallies, happy days, I'm going to make money. If it doesn't, I'm just going to call it a day on the US dollar CAD. Just happy to be out of stuff like this at the moment. You know, the August, as we know, August has been the most hideous month, and September hasn't helped at all. So happy to get out of that one at the minute. DAX looks like we are trying to break long. we've pushed up into propulsion. They've resold that propulsion gap. But potentially we're looking at a draw market structure, which I can't today. High, low, lower high, higher high to come up and test this area. And then, as I say, on the DAX, if we're going upside, sky's the limit. Literally, sky's the limit today. So this is previous day's low, which is way above ADR. So very difficult on the DAX to try and find somewhere to get out today. Obviously, ADR is there. And ADR really is just what it normally does in an average daily movement. There's literally no support resistance reason to get out on this to the upside today. So that low from Friday is the gap fill from the previous day. So that dotted line there is a potential, which is at 125 ADR. So looking at it from an exit perspective, because I'm hedged, very hard to find an exit on this today. So I'm just going to let it play out. If I need to lock in the loss on it, I'll lock in the loss on it. But if this just does this today, I'll just get out of New York and call it a day. It's going to be difficult today. It doesn't look like it's got any momentum. We will probably, all US indices and the DAX will move potentially off of the CAD CPI figure, because as the CPI figure comes out and they reshuffle the finances into or out of the CAD, the US dollar will move and the euro will also move as they're trying to reposition into the Canadian dollar or out of the Canadian dollar into the US and into the euro. So we'll get some movement potentially off of this 1:30 this afternoon. So if we can get a spike on it, might try and make an exit before the New York session, because we'll have an hour. So we'll see. Pounds off. Good. So that rejection's holding on the pound. So there was a nice reverse alert this morning on M5. Just about to kick in now. So this candle is just going to give you that reversal alert. There we go. Structure's broken. Not very clear today, but there's your W pattern formation. See if we can hold it. This is the Bank of England rallying this. We are seeking a pickup with impairments across the financial sector. We're monitoring the commercial real estate, particularly in China. We are interested in banks' exposure to China's property sector. Look at that currency strength meter. That kind of says it all at the moment, doesn't it? Absolute chaos. Just not a clue. Market's not got a clue. Banks haven't got a clue. I haven't got a clue. Nothing's got a clue at the moment. It's just chaos everywhere. It's fun though, isn't it? It will end soon. Hopefully after this week. More likes, people. Take 2 seconds. Come on, Dallas. Gives a thumbs up. Helps the stream, apparently. Thanks for subscribing, Nevin. Did I say that? I can't remember if I said that. If I didn't, welcome aboard. If I did, welcome aboard again. Can I call you the builder? You can? No. Morning, Atara. Day trader. Pound is on the way. Yeah. So that's off. That's all I've got for you today. As I say, there's nothing else to look at, really. New Zealand dollar yen is your only mean reversion opportunity from an ADR perspective. So we are above ADR now. This candle is going to cause a much tighter reversal alert. So there's your new reversal alert there. So that will be your M pattern. So it'll be stop run M or uneven M pattern reversal. When that breaks, look for a push down roughly half an ADR. So from that break, half an ADR is 27. So be looking to come back down. Probably into that low there, I'd imagine. It's about 27. Down into propulsion. little bit lower. So, however, obviously, if the limit orders trigger here, we'll get a much deeper pullback. So you can see it's exactly the same as this. Look, we've got propulsion gap, reversed. There's your propulsion gap. Come back down and retest that propulsion and see if there's any more buyers. It's good for shorts. Covered all those. And everything else is just sitting waiting. Look at these positions I got in though. This CAD Swiss just tells you what the market's. CAD Swiss last Thursday. I will be getting hopefully a second on this today. 20. I'm not even going to get a second entry on this. It's got to push higher. Euro CAD. Enter. 3 days sideways. Pound odd. When did I get into the pound odd? That was on Thursday, was it? Yeah, that was on Thursday. 2 days sideways. Pound CAD. Thursday again. Should be able to get a second on this today, hopefully. 86. Need 80. So potentially going to be a reverse alert on this one to get me into a second entry today. Where is the reverse alert? There. Oh God, I'm not even going to get into that. Look. So there's my entry. No, that's not my entry. There's my entry. That's 68 pips. That doesn't even get me a second entry. So the market's not even moving far enough to get the reverse alert EA to take second entries at the moment. It's just grinding painfully slowly. Terrible. Never known anything like it. Anywho, Peter, don't worry, I don't have a clue either. Peter, nobody's got a clue. If we had a clue and we knew, we'd be billionaires, wouldn't we? But we don't. That's the whole point of trading. If you knew where it is going, trading wouldn't happen. Whoa, what happened there? Yes. Who is the most successful investor? Noah. He floated stock while everything else around him went into liquidation. Good one, Wayne. He actually technically floated livestock. You want to be pedantic about it, but good one. I haven't heard that one. DAX is just stuck. Symmetrical triangle formation is being painted. So we're just going into contraction. So it's a bullish symmetrical. That's a really bad drawing, isn't it? Bullish symmetrical triangle. Slow, painful. The opening range breakouts have just been difficult this week because we've just got so much whipsaw at the open. There's just no volume. We need that volume. We're not getting any volume at the moment. So very hard. Very hard. But you have to sit through these, unfortunately. Waiting for the good days. Euro US dollar is something else as well that's potentially got an exit today. So this Euro US dollar initial entry was, where was the initial on this? There. So that was first entry back on the 5th of September. So again, US dollar, Euro US dollar, look, been 19th of September. Been sitting in it. Got in, literally gone nowhere. Interest rates rise on the euro, bullish. It collapses. Second entry. And I've got my own manual entry on it as well. So that's basically got potential this week for a big run. I'm not going to chance it though. I'm just going to get out in this propulsion gap. So potentially I've got an exit coming on this one today. It's not going to be a lot. It's probably going to be 0.25%, 0.5%, maybe. Don't know what it is actually. Minus 67, 200, 300. So I'm just going to go. I'm going to go a little higher up in the propulsion gap. It's well within ADR. So if we can get a move like this we had yesterday from here, Yeah, I've got a good chance of getting out there. That would be about 0.4%. So there's potential exit coming on that today. And obviously US dollar CAD is just going into profit. So potential exit on that one today on the Canadian CPI. But apart from that, I got a feeling we're waiting for FOMC. So annoying. Rajiv, quick question. In the demo account, did you post the to date in the last month's YouTube video on how the EAs for, I think, the reversal EA, I will going and look at it during breaks? What? In the demo account, did you post? I don't know what you mean, Rajiv. Sorry. So you're talking about these accounts here, yeah? On the VPS. I haven't done a video on it, no. I did one video on it, but I'm not going to do constant videos on it. Try Google Translate. Yeah, I kind of know what I think he's saying. I don't do videos on results every month. No. Yeah, I don't bother. There's no point. I just don't do it. So yeah, so I went through these this morning. So this is ADR reversals set file, done 15%. We got some drawdown on the CAD Swiss while we're waiting for that CAD move. That could be today, so that could be out of this today and all up today. This is H1M5. Obviously, we know it's just flat. Nothing. You can't. You know, the mean reversion set files, the H4M5, H4M15, and H1M5 mean reversions are not going to work in a totally flat market. They will work in a range-bound market, but not as flat as we are, because it's just not enough movement. So these are not going to be profitable but they're going to be profitable this month, but they're not going to make decent money. Last month they were slightly profitable. Yeah, but you know, we're not in normal market movement at the moment. So but the ADR reversal was done very, very well, and hedging always does. Yeah, so hedging set file 28. Wow, what did I just say? We're on. That's weird, isn't it? So the start of the live stream today, I said we're on target for a 30% month. An hour into the stream, we've pretty much done a 30% month. Just banked 8% today. So we're up in 21% DD now, which is fine. So we've got Aussie Swiss. We can bank another G on as well. We've got another grand sitting open on the Aussie Swiss. That'd be close to getting out any second now. I think we're set at half an ADR. I can't remember what targets I've got set on this. Yeah, half an ADR. So that's going to close out in a second. Aussie dollar Swiss. In fact, that might close out right now. Come on. One more. One more tick. No, you're not going to do it. There's Aussie Swiss. Right, so we could just break this high on the Aussie Swiss. That will close out as well. So just got to break this resistance. It's Sod's law. It doesn't actually do it. But yeah, so that'll bank another 1%. So then we just need to deal with all the hedges that are on. So obviously with things like the Aussie Swiss, we've got all these long positions on. Yeah, we've also got a hedge on short. So then as soon as we exit those, our DD will slightly tick up, and then it will tick back down again as we revert. So, you know, this set file is always sitting in the lowest I've seen it is about 5%. The highest I've seen it is about 35%. So we're always sitting within a range of drawdown because you can't hedge without being wrong. Obviously, you can't be right in both directions. It's physically impossible. So you've always got a nice big drawdown as you're banking much nicer, bigger profits. So, but yeah, nice if that did it while I'm on stream, but it looks like it's going to pull back from that high. So we got a nasty spread on it. Hey, let's watch it and see what happens. I think he's looking at the percentage gains, yeah. You would think I wasn't born here. You were born here, Rashiv? Did you go to school? Sorry, I'm only joking. Hey, I have days where I can't type either. Don't worry. We'll do the same thing. Over 2% in drawdown on the CAD Swiss now. Fingers crossed the news, yeah. If the news comes out negative, aggressive drawdown control, basically. In the VCPS, as you have posted results in the past on how the EA is performing on YouTube. Yeah, no, I don't, that was a one-off, Rajiv. That video that I produced, which just shows the results of all the strategies, was just there to show how the EA basically trades all the strategies, basically. It was just a video to show what it can do, really, and how all the strategies work. But I'm not doing month by month commentary on it. It's just not. I'm not, as I said, I'm not looking to sell 1 million EAs. That's not what my job is. I'm just if I was making all my income out of selling EAs, then I would obviously be on this all over the place every day, wouldn't I? Not. I can't be asked. I got other things to do, basically, like make money. Come on, I really want this to do it live on stream. It'd be lovely to have this close out another 1% on stream, wouldn't it? It's not going to do it, is it? It's going to double top, triple top. I almost want to close it out manually. Yeah. We'll see. So we're on 8.43%. We'll come back to it before end of stream. See if we get anywhere. Nice drop on the US dollar going on. Pound US dollar might be actually, yeah, we are getting some decent upside on pound US dollar now. That's good. Have you heard of Blue Guardian? Yes, I have. Someone else contacted me about Blue Guardian. Someone called Philip yesterday. I don't know why everybody is getting onto Blue Guardian, but I have to say, you know, if you're going to choose a prop firm, especially with what's going on at the moment, do you want to choose a company that looks like a gaming company for kids? I can't even type. Right? This is not a game trading. It's a serious career. Yeah, we're not playing knights and castles and pirates of the Caribbean here. Yeah. I get the branding, but this is not, I don't know. Funding for unserious traders. Funding for gamers. I don't know. I just don't, you know, I just don't like the look of the website. Yeah. This to me does not speak professional prop firm. Might be wrong, but I don't know about their rules. I haven't really looked into them, but I said in the Telegram group this morning, for the moment, I'm steering clear of prop. I'm not going to be doing any more prop trading at the moment. I've put some more money into my own accounts. to supplement it basically until we get the outcome of this My Forex Funds investigation. Because I think that we're going to find My Forex Funds is just the tip of the iceberg with this. I think we're going to get a lot of other firms getting investigated, and all these firms that are saying, ha, we're fine because we're not in the US and we're not in Canada, are suddenly going to find out the FCA is also going to investigate them. Yeah, just because you're not in the US or Canada does not mean you're safe if you're doing the same thing. It means that the FCA just hasn't started its investigations yet. So any prop firm you put money into, whenever you think about when you do a prop evaluation, you've got to get through phase 1, you've got to get through phase 2, you've got to get through into the funded account. Then you've got to build up trading balance to get paid, and payouts usually are every 2 weeks or so. So if you think about it, if you were to start an evaluation today, if you get through all of the phases to funded stage and to payout stage, it's going to be about 4 to 6 weeks. A lot can happen in 4 to 6 weeks. My Forex Fund's website has just vanished, turned off, disappeared. Why? No one said. CFTC haven't said that they've shut their website down, have they? I'm just seeing if there's any more on My Forex Funds here. Nothing more on My Forex Funds on the CFTC website. So, you know, why is their website suddenly vanished? Yeah, My Forex Funds has gone. Not just we've got a problem, we've shut down for a minute, we don't exist anymore. So they owe a lot of money, including to me. They owe me money. I don't think I'm going to get that back. There's no way I'm sticking anything into any prop firm until I know what the outcome of this is. Is the industry dead? Has the industry got to be regulated and restarted? Can the industry only do things in certain ways, which means that they cannot do this, that, or the other? I don't know. But until that point, I'm not sticking any money in any prop firm anywhere, especially not one that looks like it should be playing with bricks like this. Yeah. Just, you know, you know, and this, all these prop firms that offer all these discounts, you know, they just smack of desperation. Everybody's giving 20 to 40% off at the moment because My Forex Funds have gone bust. Why? Because they want as much of your money before they go bust as well. That's what I see at the minute. I don't see any reason to go to a prop firm unless you're going to one that's been established and is a physical prop firm with a physical office where you can rent a seat and go and sit down in it and trade. That's a proper prop firm. These are all gimmicks, all of these now. It's been proven by My Forex Funds, isn't it? I don't think anyone's safe. FTMO's not safe. I don't think anybody's safe out there now. Now this regulation has started. But we'll see. Pound CAD, ADR, not ADR, RSI extension. Just gone below the 30 level. So we got an RSI extension. Even more extension. Yeah, I don't know. Just be careful. Sarah, please clarify again. You put the market reversal alert EA on separate accounts, then you load the set files for the different strategies. Yes. So look at that pullback. So basically, there's 4 MT4s running. That one is running ADR reversals. It's closed out Euro Swiss. Nice easy ADR exit. That's a very typical next day exit. That's pretty normal for ADR reversals. So that was running ADR reversals. This one is running H1M5 mean reversion. This one is running this one is running the hedging set file, and this one is running H4M15. But this is actually running H4M5. There's very little in it. It doesn't matter which you run. They both pretty much do the same thing. Yeah, it's 4 different MT4s, 4 different accounts, each running a different strategy. You can't put the same strategy on the same MT4, different strategies on the same account, I don't think, because you're going to get duplication. Yeah, on H1M5, H4M15, and ADR reversals, they will all trigger at the same time. Yeah, so if you think about it, if you get a news event that causes a massive spike in the market, it's going to hit ADR. So the ADR reversal strategy is going to take a short on the next reversal alert. It could well get extended on hourly RSI. Hourly RSI, M5 is going to take a reversal alert. H4, M5, H4, M15 could also get extended on that news event. Yeah, so you'll have 3 trades taken on the same instrument with 3 different strategies. So you need to run them on different accounts. So you've got that separation and that diversification across the different strategies and accounts. Otherwise, you're massively overexposing yourself. As we know, exposure can kill, especially in trading. Come on, I already want this to shut out live on air, but it's not going to do it, is it? Just not going to do it. Just to annoy me. It's going to hold that resistance and it's going to come back down. Not playing ball today. AZ, do you know who Don Vo is? No, he's a Lambo kid, but I do respect that he live streams all his trades every day. No, never heard of him. Like I say, if you talk to me about anybody that streams, I'm not going to know who they are because I'm streaming. Yeah, I can't physically watch while I'm doing, so I'll never know who's out there doing what anymore because I'm always in here and I have been for 4 years. That's how long it's been since I've watched streamers. I must admit, I admire the courage to do this live and teach us the pitfalls. Well, someone's got to do it. Took along on 6A. I'm on Top Stats Combined. Good man. Not sure how that helps us today, but US dollar Swiss push. Yeah. So US dollar's really having a down day at the moment. Big sell-off on the US dollar. So everything will be pushing our way. I just need this pound to kick in. The pound just needs to stop having a down day and have an up day at the same time as the US dollar is having a down day, and we'll be back up here very quick. I'm almost tempted to put a second aggressive drawdown control position on this, to be honest, at the moment, because this one I let it go a bit too far. If we break that high, I'm kind of tempted to take another one just to try and get out of this thing, because I need to get out of this pound US. I've been in it now for long. Look, not often you can have to zoom out to maximum zoom to see your first entry. This is how weird this market is. Going back to July, I entered this. So yeah, waiting. All I need is a couple of ADR. Yeah, I just need that. I need a couple of ADR push to the upside and I'm done. That's it. That's all I'm asking for is 2 up days in a row. That's all I want. 2 up days in a row. We had it there. Since then, nothing. This entire month of September, we haven't had 3 up days in a row. When we had 3 up days in a row in August, all it was small movement. There weren't ADRs. Yeah. That's what I need. A couple of ADR pushes. 1 negative news event from the US dollar. That's all it's going to take for that to pop. And they will just suddenly reverse this and profit take that position. But until that US dollar news comes in, and hopefully the Canadian today, it's just not going to happen, is it? But yeah, US dollar collapsing at the moment. They're selling off ahead of FOMC, obviously. So the days leading up, most of the time actually it's on FOMC day, but leading up to FOMC, the market will reposition itself on the US dollar, preparing for what's coming. So you'll see a lot of profit take moves potentially today. Whether or not they push ADRs or not, we'll wait and see. But this looks like a profit take move underway. Weak Canadian dollar as well, by the looks of things. Can't really tell, actually. Not weak Canadian dollar. Yeah, we'll see. What you just showed is for the 4 accounts on all on Robo Forex. Yeah. What's the size of the VPS? Don't know. How do you tell in Windows? I don't know how to tell in Windows. What's the this VPS is 16 gig RAM, 4-core CPU. So it's 4 CPUs, 16 gig RAM. Storage is irrelevant. Storage has nothing to do with it. You'll never get a VPS with not enough storage. You know, you don't need much. It's only MT4. So you don't need much storage at all. But yeah, 4 CPUs, 16 gig RAM. That's enough to run 4 MT4s comfortably. I say comfortably. I would say it's not on its limits, but it's you can always do with more processing power, obviously. I've got multiple VPSs though. I've got other VPSs which have got 16 CPUs, but they're well, I haven't actually anymore. I've got rid of it. I literally just got rid of it this month. I've amalgamated 2 of my VPSs together. But use whatever you want. I mean, the company that I recommend and that I use myself is Forex VPS. I was getting confused. There's 2 of them that sound very, very similar. VPX Forex Trader. These are the guys that I use. I've been using them for years. Never had a problem with them. The nice thing about these is, so this is, sorry, that's dedicated that I've got. I know I upgraded it. So that's what I started with, and I basically have upgraded it. So that's basically the one I've got, basically. So, but you can see here, it gives you how many MT4s you can run. But this is very much a rough estimate, yeah? There's a big difference between running 1 MT4 and 4 charts and running 28 charts, yeah? There's a very big difference in processing power there, yeah? So that VPS is running 4 MT4s with 28 charts running on each, with the EA running on every single one of those charts, yeah? My other VPS that runs my opening range breakout EA, that only runs 4 charts. So you'd only need something tiddly to run that. But if you want to run 4 strategies with all charts open at the same time, you need more, much more. That says it runs 10 MT4s. It will run 10 MT4s with 1 chart on, but 28 charts on 10 MT4s won't stand a chance. So you've got to and this is why I like VPSs, because you can upgrade them at any time. You can always tweak them and upgrade them. They just add a load of CPU cores or add a load of RAM to it. You can contact support and they'll do whatever you like. They're a really good company. I also had a dedicated one of these, which was also very good. Overkill. Never ever put enough MT4s on it to chug this thing down. I mean, you just would go forever, but it's a lot more money. So I have got a dedicated VPS with another company actually that I'm trialing out called Dipgate. Yeah, Dipgate. I have to say, pretty good server, this company. They're another Forex VPS provider. However, I think they're new. The reason I think they're new is when they set up the VPS, they put Windows Server 2012 on it. And I know for a fact you can't install MT4 on Windows Server 2012. So for me to have to tell a company that runs trading VPSs that you can't install MT4 on Windows 12 and they need to upgrade me to 16 kind of rang alarm bells a little bit. So not sold on them yet, to be honest. But anyway, ADR, New Zealand dollar yen, big push continuing. New Zealand dollar yen 125. So we've broken out that high. Yeah, this is why you wait for the reversal alert. Yeah, we have not had a reversal alert yet. It's there now. So wait for the reversal to trigger in. It's yen this morning. That's not a good gauge, is it? Because US dollar's dying. So this yen this morning, not very healthy. A lot of weakness coming into the yen and the US dollar at the same time. Thinking of buying a used laptop with 32 gig of RAM just for MT4. Yeah. DAX is going up. Trying. Propulsion gap's filled. So see if that holds that level. But it's not gone far enough for me today to actually do anything with this. So basically, my back testing on the hedging strategy that I'm developing. If you take profits before 3 to 4 are from the range, it very rarely is profitable because it might look like it's turning, and sometimes it does, but other times it would just go twice against you, and it just doesn't work. So on days where we get hedged like this, we need a big move to be able to get out of the trade. So if this is just going to flip-flop, it's just going to be a loss today. And we'll hope that the New York session kicks in and we get some money out of New York. Can't win every day. When do you see the market finally moving again? Or is this the new norm? I was expecting it to move 2 weeks ago, 3 weeks ago. Yeah, I hope this is not the new norm. I really do. If this is the new norm, we're going to struggle. And we're going to have to adapt. So thankfully with position trading, you can adapt fairly easily. I don't know when this thing's going to move, because this is a perfect example, the Aussie US, of what we're now having to sit through. It's just taking forever to get out of positions and to get into positions because the market has no relative strength at the moment. And the reason the relative strength hasn't come back is because everything's in the same boat. Everybody is hitting terminal rate on their interest rates, and nobody knows when the market, or the central banks, are going to turn around and go, okay, this is good enough, we're going to shift. All the time we're getting figures like this coming through on the US dollar and the Canadian dollar, where inflation, which is the whole reason we're putting interest rates up, is actually rising. They are never going to call a terminal rate, and they are never going to tell us that interest rate is coming down. There is only one way to go. If that goes up and continues to reverse, that has to go up. If that doesn't go up, world collapses. Yeah. If inflation continues to rise and gets back up to this 5%, 7%, 10%, and we're sitting at these levels, you're going to be looking at those 15% interest rates, which means you can't have a house anymore because you can't afford a mortgage, because your rates of pay are not going up. Your unemployment is going to skyrocket. everybody becomes poorer. Everything becomes more demand driven. Inflation rises further. Yeah. So we're in really, really worrying times. The fact that the Canadian dollar and the US dollar are up at 5 to 5.5 interest rates, and inflation is not going down anymore, it's turning back up again, is worrying, really worrying. So this is why the market is so reluctant to put any moves in, because they have no idea where to put their money. There is nowhere safe at the minute. The yen used to be safe. The Swissy used to be safe. The euro has just increased its interest rates and collapsed. That never happens. Yeah, you don't increase your interest rate, make yourself more attractive to investors, and your currency devalue. That's just not what happens. So this week is why I'm saying it's kind of a make or break, because we've got 3 major interest rates this week and 2 major inflation figures. This afternoon, we've got the inflation for the Canadian dollar. If that's gone up, CAD's in trouble. Yeah. It will probably have a pop, the Canadian dollar, because there's nothing else to do but increase interest rates again. We've got the inflation figure for the pound. That's forecast to go up. We're at like 5.5 on the pound. Look. Yeah. Sorry, 5.25. We're going up to 5.5 this week on the pound. Yeah. So there's our, sorry, that's the Fed. There's our pound rate going up. Yeah. We're forecasting an increase. That's not good. That's not good. Yeah. The Fed are looking to freeze. However, their inflation's going up. So the next time we get the US CPI figures coming through, if they've gone up again, we're going to be in even more trouble. If unemployment claims go up, we're going to be in trouble. The US dollar's going to drop. So we're at a real critical state where everybody in the central banks is kind of saying, it looks like we've done enough. However, we're going to be reliant on the data. The data's saying you haven't done enough, which means where do we go with the currencies? Because you want to put your money into currencies that are increasing interest rates and you're going to get a better return. However, everybody's saying we're not sure we're going to do that. Nobody's saying it's coming down. So the market is stuck with the fact that there's nowhere good to put it and there's nowhere really bad to put it at the moment. So just don't move it. What's that cause? Nothing. We don't move. If you haven't got a reason to put your currency in a different place, you just leave it where it is. We get stagnation. Stagnation makes it very difficult to make money. So that's where the market is at the moment. We need one of these guys this week to say something that is going to change things. Look at the Swiss National Bank. The SNB is putting their rates up to 2%. Yeah, look at the SNB historical rates. Negative 0.75 since 2019. Negative 0.75, negative 0.75, negative 0.75. We're going up to 2%. The Swiss have never put their interest rates up to 2%. They're negative. That's why everybody puts their money in the Swissy, because it's a safe place to put it. You know you're safe there. You're not even safe in the Swiss franc anymore. Look at the yen. The yen, negative 0.1, Bank of Japan rate. It's been like that since 2016, negative 0.1. Yeah, they are not changing. But if they change, we know we're really stuffed. If the Japanese are having to increase interest rates, we're in big trouble. You know, this is, the market at the moment, and for the last couple of months, we've got to this point where we're just constantly, we've been told for 6-8 months now, we'll be data driven. The market has had an expectation for data, and that has pretty much followed through. We knew what was going to happen. We knew what was coming. We knew that that should fix that. What we're seeing now is that has not fixed that. So now what the hell do you do? Nobody knows, because we've never been in this situation before. This market situation we're in hasn't happened before. We've also come out the back of the biggest bear run we've had on the S&P 500 and the stock indexes in general for decades. The market doesn't know even how to recover from that. Yeah, we're in a very, very different situation since pre-COVID trading. And even post-COVID trading, at least we knew where we were going. As soon as those interest rates started to go up, we're all stuffed. I don't mean markets in general, because they just don't know what to do. So from our point of view, it makes it very difficult to do anything, but you just have to ride the waves. At the end of the day, the thing that we have as an advantage on our side is we know that the banks have to still make money, and they will still make money. And as long as the banks are going to make money, they will push and pull the market, because that is their money-making mechanism. The pullback on the rally is where they make their money. That's what we trade as position traders. So as long as the banks and institutions are going to continue to make money, we know we can. It's just going to be harder. So to adapt, what you have to do is change your sensitivity on your instruments. So the RSI may have to switch back down to a 14. Yeah, we need more entries, faster exits. Yeah, so that may become the new norm. But I'm waiting and hoping that they kickstart a move soon. As soon as the first thing we're going to know about it, why can't I click that? Is a squeeze. We're going to get a squeeze on something. And I mean like a parabolic squeeze. And then we will get a parabolic profit take. And then we'll be like, right, things are moving. But the first clue you get is a news event that starts a fundamental shift. And you get an ADR hit, an ADR hit, an ADR hit. And then you're like, right, that's the new direction. You'll suddenly see the COT data shift. So you'll see a big swing in COT data from week to week. Unfortunately, we're always 2 weeks behind COT data. Unfortunately, there's nothing we can do about that. That's the only time they release it. But you'll suddenly see a 32 become a 37, then a week later become a 42, and you're like, okay, we're now not going that way on the euro. We're flipping back, or vice versa. So we'll see a shift in the COT data, but this COT data hasn't shifted. If you look at the historical COT data, it hasn't shifted for a year or so. We just haven't had, this takes ages to load this page. We just haven't had much of a shift in COT. Going back to 2022, for example, there. Yeah. That's the shift we've had in COT data. Tiny. Yeah. It's like 10% shifts. That's all we're seeing. We're not seeing any movement anywhere. It's just, and it's getting worse. It's getting contracted. It's just like it just feels like there's an explosion coming. And typically that tends to be the start of a bubble burst. And the bubble that we're in at the moment is the housing market because of interest rates. Interest rates are going up at a rate we haven't seen before. Housing prices are now coming down. So year on year in the UK now, we're down 5%. That will accelerate. As those interest rates goes up, mortgages and repossessions will increase. The housing market will drop further. Prices will become smaller and smaller and smaller. People go into negative equity. Their debt goes up. And until that interest rate comes down, there's nothing they can do about it, the central banks. So it's stuck. So that doesn't answer your question, AZ, does it? But I don't think anybody knows. This is the thing. Grow Together, where we see that type of data. This information on the website, my website. It's a fundamental section on the website. Go and have a look. Everything's explained on there. Yeah, I don't know. It's tricky. It's tricky at the moment. Right, that's all I've got for you this morning. There's nothing much else to look at. So this US dollar move hopefully will continue today. It would be nice if we get a nice big drop on the US dollar ahead of FOMC. US dollar CAD's coming down very nice, so it looks like I'm going to get an exit on that today. Not going to make a lot of profit on it, but I'll take anything at the minute. So yeah, we'll see how we go for today. But this CPI figure, so if this US dollar CAD, I mean, it's a lovely little drop we've had here. If we can be down here somewhere by 130, I'll just protect this. I might have to take a loss on it because the reason this is only showing as 0.04 in profit, although that's the average and we're all the way down here, is because obviously I've got a load of swaps because I've been holding this for a long time. So you have to take the swaps off your profit, obviously. So I want this really down here to be able to bank it and make some decent money. And obviously negative CPI, or rather positive CPI from the Canadian dollar today is what's going to achieve that. So double-edged sword. I kind of want the CAD to drop, but I also want the CAD to pop. Don't mind which, but I'd like to be out of this one first, ideally. So we'll see what happens. Right, I'll leave it there. Anything else you need, let me know. My plan for the DAX, just before I go, just to reiterate what I'm planning to do with the DAX today. So I'm just going to sit in this hedge and I'll take that loss if it doesn't move today. But upside, I would want it up somewhere around ADR and then try to get out on a pullback. Downside, I will be out at ADR, which is support. So I'll be looking for this support to the downside or somewhere around here. If I see some price action triggering a bit above, might look at getting out, but right now, obviously, we're not going anywhere. So there's nothing you can do with this today. As I say, market doesn't move, you can't make money. End of story. Right, have a good one. I will be back this afternoon at 2:20 for the New York session. We'll have a look at the US indices, try and make some money out of them. Yeah, I will analyze the outcome of CPI, which is at 1:30. So just be aware, market movement at 1:30 this afternoon. And then we'll have a look at it at the New York Open. All right, have a good day. Anything you need, let me know in Telegram. Otherwise, I will see you guys later this afternoon. Have a good one.